David Kelly,
Yes.
you are our trucking insurance advisor. You do
Yes.
other things, but that is your
Yes.
specialty, right?
Absolutely.
So, quick background, how'd you work at BDI? How'd you get here? How'd you get into trucking?
Oh my, it started a long time ago. I guess probably back in 1993. I started working for an insurance company, a carrier, not an agency, and I was a software developer. At the time, we were in commercial trucking only, and we made a pivot to non-standard auto, and then we also came back into commercial auto as well after that. So I was responsible for writing a lot of software that handled everything from rating to billing systems to understanding how claims works and supporting our accounting department. And so I did that for roughly 13 years, working through that IT department, managing a lot of people as well while I was there. Um, and then God called me to pastor for 20 years full time. And so I did that, and I've always kind of kept my ear to what was going on in the insurance world because I have friends that were working there still. And I guess about 5 years ago, God put a need for me to relocate and become a bivocational pastor and get back into insurance full time, and that's what I did. Never knew at that time I was going to be doing trucking, and so probably I started with churches and garages, but probably 3 years ago, I started making a hard push to get into trucking insurance. I knew a lot about it. I knew how rating works. I know how the rates are computed and things like that for auto and trucking insurance. And so it was a nice fit. It helped me, I think, help my clients really well because there was things that a normal agent just doesn't naturally think about.
Yeah, you had some inside knowledge.
Yeah.
And I'm interested in this topic for two reasons, because I'm marketing, and then the second reason because my mom's a truck driver.
Right,
And so
right.
I tend to kind of want to have information for her as well. And
Sure.
so I have gleaned a lot of information just in our time together, kind of talking about marketing for truck drivers
Right.
to write their insurance. And so I think that number one thing that I think that people want to know is like, what's affecting their premium? You know, because my
Sure.
mom, my mom
Sure.
has had a small fleet before, but she's also been just an individual owner operator for literally my entire life.
Right.
And so for me, I want to be able to say, "Hey, mom," the and you and I've talked about this off camera,
Yeah.
so you know some of the mistakes that
Yeah.
were made. But
Sure.
anyway, so let's say for an audience
Sure.
that has no idea, what would you say the big things are that affect their premium?
Well, I think it's far more complex than they would want to even think about, and I think that's what makes it confusing. And I think simplifying it is best because most times they'll have a friend that'll have a rate. Hey, I got a friend that's got a rate and he's paying a lot less than me, and he's got the same truck. What's going on? And so I'll have to say, well, there's a lot to that, and the factors they need to think about. Number one. And these are in no particular order. Their credit score does play a role in their rate, their DOT scores, and how they get inspections and what those inspection scores look like in each individual area of those inspection scores. Their accident history plays a role. Their driver history, if even their personal driving records matter. They get a ticket, they have an accident, that can follow them. And then their loss history that follows that DOT, their business. And then also the thing that a lot of people don't think about is where they live. That zip code has rates tied to it. And sometimes if there's more accidents in a given year or two in that zip code, rates will go up just in that area. That's why parking, where they park their truck or garage their truck, is also of huge importance. And so sometimes there's some things in there that we can actually help them work on and balance to actually get the best rate. And so they'll take all these factors, the insurance carriers do, and they will merge them into some information. And they'll have most carriers have at least 6 tiers of rating, meaning someone may get the very best, cheapest tier of rating, But if one or two of these factors that we talked about is off or not as, optimal, they'll go down a level or two. And if a lot of them are off, they'll get the very worst rate.
Yeah.
And there can be a place where things are so bad that the insurance carrier will say, well, we're just not renewing you because it's just not worth our risk.
Yeah.
And so they'll get off that policy. But there's a lot of things that can affect that rate for them.
Yeah. I think what you said right now is risk. I think a lot of people don't understand that we understand because we're in the business is that a carrier is looking at what are the chances that there may be a claim,
Yes.
which is the risk. And so, like you
Yes.
said, driving record's a big deal because if you're a reckless driver,
Absolutely.
you've had too many accidents, then
Yeah.
you're risky for me.
Yes.
You know?
And
Your credit score's bad, meaning you don't pay your bills on time, so
Right.
you may lapse, and there may be, like
extra cost for the carrier for sure. And I think the other thing too that people don't think about is insurance provides the person who's insured protection because you're driving a very heavy vehicle. And if you're in a collision, the chances of you getting hurt are low, but the chances of someone else getting hurt in a smaller vehicle are very high, to the point where there are, fatalities, unfortunately. And, if you're driving a vehicle and you hit someone or have an accident, regardless of, who's at fault, the last thing we want is to see someone lose their life. But in the case where they do, that's where you don't want to be on the hook or for that. You want an insurance company to stand behind you that will pay out and take care of a family so that you're not personally liable or sued. And so I think a lot of times we think insurance is an evil, but it is a necessary thing for people to protect their business and also their personal lives.
Yeah. So we talked about this off camera, and I want to go there with really this first real question, which is, what insurance do they really, truly need? Because you told me this yesterday, inflation is going up, right? Cost of fuel is going up.
Right.
Pay per mile is going down.
Yes.
So you said their net income is not what it used to be.
Yes.
So what are they? So right now they're just trying to take the bare minimum a lot of the
Right.
time.
And I'll touch on that too. I want our clients to understand we're aware of the pains that they're going through right now. They're not getting paid as much per mile. The cost of the trucks have gone up, although that's coming down a little bit. But fuel has not come down a lot for them. Maintenance has not come down because labor has continued to rise. So, getting tires replaced, getting, brakes worked on, getting their engine repaired, those kinds of expenses have not come back down. And so they have all these factors that are tied to their expenses. And I think a lot of times they're just like you said, let me get by on the bare minimum, Well, the bare minimum that's required by the state, is they have to have liability. The state only requires $750,000, but most of their contracts are going to require $1 million of liability coverage, and they all know that. And then most of the time they need $100,000 of cargo coverage, and so, but that's just covering their liability to others, to get in this insurance game, if you will, but really protecting their business. A lot of things they don't really think about is this uninsured motorist coverage. It'll generally cost you an additional 5% of premium, but that uninsured motorist coverage protects them if they're in an accident and the other person's at fault. And right now we live in a day and age where people are driving without insurance or very low limits. State minimum limits are incredibly low. Property damage minimum is $25,000 here in Texas. It's as low as $5,000 in some other states like New Jersey. One of my clients had an accident in New Jersey, and we had talked about uninsured motorist coverage and how important it was to protect his business. And so we talked a little bit about that and how if you'll carry some of that, it will protect you from possibly being shut down. And so in a day and time where expenses are already tight, the last thing you need is a tragic event on the highway that really puts your business out. And so this guy got in an accident. The other person was at fault, and he found out they had $5,000 of property damage coverage.
Well, his truck for sure probably cost more than that.
His truck was actually worth $80,000, And because he had taken this uninsured motorist coverage, he was able to get his truck repaired. He got a rental replacement. Had he not been able to get that rental replacement, or he was too injured to work, that policy actually would cover some lost wages. You'd have to show some proof, but it would keep your business moving, allow you to, keep going. So you could make up that. But rental replacement for a vehicle is crucial, to keep that business operational where you can actually keep driving. So that's probably one of the main areas that people don't think about that's really important right now.
And like you said, it's not even that much.
Yeah, it's not that much comparative to the total premium, and it can keep you in business. So there are a couple other coverages that I think are important to consider. The personal injury protection, or PIP, as it's often called here in Texas. It's also known as a medical coverage. It's a very good coverage, and you have various options on limits for that coverage, all the way up to $25,000 per person in your vehicle if you're in an accident. And that covers you if anybody in your vehicle is injured in any kind of accident. So, and I always like to think about it, if someone has a medical insurance policy, which most people do, there's a deductible with that. And if you're in an accident and, you're injured and it is your fault, if it's in the unfortunate event that it is your fault, the last thing you want to have to do is pay your collision deductible. Now you got to turn around and pay a medical deductible. That PIP coverage will actually pay the medical expense, and you can use that to offset your medical deductible. And if the limit's high enough, it has some really neat other coverages built into it. It can make up for some lost wages. It can also provide some, payment for services around your house while you recover from injury, such as cleaning your house or even having your lawn mowed.
Wow.
So it's pretty handy coverage, and it's just something people don't think about. Couple other coverages that I think people ought to consider. Of course, your property damage coverage on your own vehicle. A lot of people think, well, I got it paid off, I'm good. But if that truck is totaled, can you afford to buy another truck? Now, if you've grown your business to the point where maybe you have enough cash reserves for that to happen, but maybe you really don't want to go back into debt on your truck, you need to carry physical damage coverage, comp and collision, which, pays for the repair to your vehicle. And banks and lending institutions always require it. But just because you have that vehicle paid off, you have the investment in that truck. And so you don't want to have to start over again. And I think a lot of people need to think through those things.
Yeah, because it's not just like your personal vehicle. This is your business.
This is, yes,
On the
this
road.
is business property on the road, and business property is always more expensive, it seems, than personal property. A couple other things, too, that I've run into. A lot of people don't really think about roadside assistance coverage that's offered through their carrier. These trucks, when they break down or when you're in an accident, have to be towed. That roadside assistance coverage can, bring you fuel, help you get to a mechanic shop, provide towing. I've had clients broken down out in the middle of, a very sparse area of our country, and they have been charged $9,000 to $12,000 for a single tow.
Dang.
And that puts an unusual strain on a business. And so, roadside assistance coverage is very minimal, as far as the policy premium as well. And it's something that definitely needs to be considered. People that probably drive more regionally around their home probably aren't as concerned with that, because they know mechanics, they know people, they can get to help. But if you're over the road and you're way out there, it's something you probably should be carrying.
Okay.
And then the other one is rental with downtime. You're in an accident and it is your fault. The UM coverage would provide that if it's the other person's fault, but rental, coverage would keep you going and working even if you were in an accident, it was your fault. You could add that, rental truck to your policy and just keep moving and working so that you can make income to pay all the bills that you've got coming in.
Yeah, that's awesome. So one of the things that you told me affect their rate that we said earlier was their SAFER score.
Yes.
What is a SAFER score, and how do we improve it?
Well, a safer score is something that's managed by the FMCSA, Federal Motor Carrier Safety Administration, Carrier Administration. Yeah, I believe that's it. All those letters start running together, but it is something that, you know, when they get pulled over or they have to go into a weigh station and get an inspection, I would say the number one thing to improve your score is to be prepared for the inspection. Before you, every day, before you take off in your truck, walk the truck, check all the tires, make sure, you know, that they're in good shape. Check your brake lines, make sure there's no fluids leaking, there's no chafed brake lines. And then also something as simple as making sure the cab of your truck is clean and nice. They're required to also have a fire extinguisher fastened down in that cab, and you know, just make sure that is fastened appropriately. Anytime you get pulled over and you have somebody looking at your truck, they don't need a reason to look at more of the truck. So if they see you're taking care of that cab of that truck and everything's in perfect order, the less likely they are going to be to take you from a low-level inspection to a more intense inspection level. So I would say that's probably the number one thing. Now, if you already have a safer score issues, and there's six, I believe at least 6 or 7 different classes of ratings with that safer score, from crashes to vehicle maintenance to, you know, even our driver fitness, you know, alcohol or drug abuse listed on there. Vehicle maintenance is one, driver hours of operation. There's all kinds of categories, and I would strongly suggest that people know what their safer score is, and we'll try to do something here at some point to kind of help them see how to access that website for their DOT number, and kind of look up what's there, because the insurance companies are looking at that score.
Yeah, so you should be too.
Yes.
Yeah.
And then so you want to reduce out of services on that score. And you can have an out of service for a vehicle or an out of service for a driver if he's over his duty status hours. You can get a vehicle put out of service if it has bad enough maintenance going on with it. And both of those, if you get inspections done, let's say you've got 4 inspections and 2 of them you were put out of service for your vehicle, you have what's called an out of service score of 50%. And most carriers don't want to see that out of service score any higher than 25%. They get very concerned, and they would love to see it at 0%. But there's just a lot of factors. And so when you start getting things adding up on your safer score, you can expect rates to be higher for you. Now, there are some ways, and we'll put some tips out there too on how to manage that safer score. There's some great links already. I think Motive, which is an electronic logging device company, they put out some great information on how to go about lowering your safer score. Then one of the things I would mention is you have 2 years to appeal any violation on that score. So if you disagree, don't disagree while the inspection's going on, because we're well aware, you know, and it's human nature, right? If someone's inspecting and you give them a hard time, their tendency is going to be a little bit harder on you. And I would say, hey, just be as calm as you can, and know that, you know, you can appeal later, and you might have to subscribe to a service to do that, or get an attorney to help you do that. But you can work on those scores. And once you get those scores reduced over time, what you do is you go back to FMCSA, and once they've removed, you know, a violation or reduced it, you can get what's called a data queue from them, which is a report stating your scores changed, and you submit that to your carrier, and then the carrier can reevaluate your rates.
Awesome.
to help you find some savings.
So when you get a truck driver calling you for trucking insurance, what are you looking at? Because I know your big job is saving them money, because that's what they want.
Sure.
Or, you know, like, you want to give them the coverage that they need to protect their business. But what are you looking at? What kind of discounts are available usually?
Right. Well, one of the things I'm looking at is if they will give me their declaration page, their current one, or their renewal declaration page. I want to look to see Has somebody been working for them? Has somebody been helping them? Are there things that have been overlooked? And unfortunately, we live in a day and time where trust is not, just naturally there. And it's understandable because, there's a lot of people just looking out for themselves. So it takes time to build that trust. Sometimes we have to have conversations. We get on phone calls with their carrier, with them, and show them kind of what we can do. But the things I'm looking for on that declaration page are things like, hey, are they taking advantage of payment discounts? Has anybody even talked to you about a payment discount? Do you know you can get pretty good discounts sometimes for paying in full or to sign up for automatic bank draft payments? Those kinds of discounts are huge. I would also say if you're just starting out, they will offer you discounts for prior proof of insurance that's not even tied to trucking insurance. They will look at they'll take your personal auto insurance and say, hey, have you had a policy in place for the last year? If yes, then there's a small discount for that. There's a couple others, like most truck drivers, that are driving the large trucks or, having to pull loads that are exceeding 26,000 pounds if they're federal and they're going over the road, interstate type trucking. They are required to have an ELD device, an electronic logging device. Most of them, sometimes they don't even know they can get a discount for just reporting that logging device to their carrier. Most of the time, depending on if it's the right partnered device, you can get 5%. It's as little as 3%, but there is a discount if they're willing to do that. And then also I would look at things like, hey, are you overpaying for the radius you're driving? A lot of people in this economy right now, they started off as long haul trucking or, a lot of times when you first are establishing your DOT, you're required to carry at least a 500-mile radius and more, and up to unlimited. But then after you've been at it for a year, maybe you decide, no, I've actually been working more regional here in Texas, or, and of course, Texas is a huge state, so we have to ask a lot of questions. But those radiuses can drop down from 500 to 300 miles, or even 200 or 100 miles. And it's important because if your radius is set at 500 miles, that's what you're paying for. You're paying for a lot more driving. They're anticipating you're doing a lot more driving than if your radius is, say, at 100 miles and you're staying more local. It also makes sense, too, if you're driving local, you're more familiar with all of the roads. And so you probably have a tendency to know more what you're doing. Nothing's going to catch you by surprise. And so that smaller radius is seen by the insurance companies as having less risk. And it results in less premium. And so
now, is this 90% of?
Yes.
So if they normally stay under 300 miles, but they take 1 or 2 trips a year that are over that?
Certainly. Yeah, you could have a client with 100 or 200, 300 mile radius that they're constantly working here, fairly regionally. But then every now and then, man, maybe they take something and they drive to Georgia or New York or whatever. As long as that's not exceeding 10% of their driving time, at least in one of the main carriers we work with, that's their standard. So just whatever you're doing, 90% of the time or more, that's what your radius needs to be set at. And when we talk about radius, I've also had this confusion with some people. They think it's how far I've driven, on a trip that day, meaning I drive to a location and back and they're counting the round trip. That's not what the radius is about. It's just how far one way are you driving. Whether it's 100 miles, it may be a 200-mile day for you, but you're driving 100 miles out and 100 miles back. That's considered a 100-mile radius.
That makes sense, because if you think of a radius being a circle, I
Sure.
just need to know where the edge of the circle is.
Exactly.
Yeah. Okay.
Exactly.
Cool.
So,
I didn't know that. Yeah.
So I think a lot of times people need to be reminded of that. And then, I would say there's other discounts too that sometimes people overlook. And it makes sense, especially as a business grows, to have what's called a general liability policy or a BOP, a business owner policy. If you have a little property, you need some property insurance. If you don't, maybe you just have a lot where you park trucks. That general liability policy will actually cover your business for people walking onto that lot. If they're injured and they sue your business, it would protect you. If you're hauling loads somewhere, and you leave straps behind or a hand truck or something like that, somebody trips over that, they can sue you for that. If your business advertises and somebody accuses you of slandering their business through your advertising, that policy would cover you for that. And that really adds some value and protection to your business. But what a lot of people don't realize is that policy actually offers you a discount on your auto policy. Most of the time, it's at least enough to cover the purchase of the general liability policy as well. So, and in a lot of cases, it results in more savings than what you spend on the policy. So it makes business sense to do.
So you have more coverage and less risk, so less premium, or less.
Yeah, you used to have more coverage, but the discount offsets everything to where you actually save more money than you would have spent originally.
Yeah.
So that's kind of the things I look for. And just business change too. Like, are you hauling the same things you were hauling? Are you, maybe you were hauling mobile homes and now you're not. Well, we need to update that because mobile homes are a little bit more risky than some other types of coverage. So you want to make sure that your commodities are correct. Just everything on your policy is correct and as accurate as possible. But there's a lot of things that people just overlook and they're just missing out.
Yeah, and they're probably not having anybody ask them those questions.
Right. Absolutely.
So one of the mistakes that my mother made with her fleet, this was years ago, so she won't mind me saying this, was she hired drivers that didn't have good records. And that, like, I kept seeing her premium, just because I was handling her books at the time, just her premium kept going up, and it was killing her. And so what do you do for that?
You get rid of those drivers is what
Just
I would,
say no.
I would just recommend it. Just as these insurance companies are looking at you and your business, you need to be looking at the drivers you bring aboard, because anything a driver does while working for you is going to follow your business for at least 3 years. It'll follow on your DOT scores. If you're leasing their truck and them onto you, and your DOT number's on the side of their truck, and they're not taking care of their truck, and they get pulled over, that one bad inspection you're going to be stuck with for 3 years.
So what should an owner do if they're going to bring another, like, how do they check those drivers? Do they check their DOT?
They should personally be checking their MVR record. You can buy through the state of Texas motor vehicle reports, and you can find out what somebody's driving history is like. That's the number one thing you can do. Secondly, if you're leasing on their truck, you need to be inspecting that truck yourself. You need to be walking that truck. You need to be looking at every possible thing that a DOT officer might look at to write up that truck. And then you probably need to conduct periodic inspections of that truck. And like you said, one bad driver can pretty much ruin you for quite a while. And that one accident that driver has, it just expands on itself, because now if you have a driver that has an accident, that's going to show up on your DOT history. And you won't get rid of it. It'll show up on your insurance history. And then that driver, sometimes they'll lock that driver onto your policy where you cannot remove them. The only thing you can do is exclude that driver, but they are tied to you for that 3-year period.
Wow.
And so your best guard on that is to scrutinize drivers coming in. And I know it might be your friend. I know sometimes it's a relative.
That was the case.
Yeah.
These were friends.
and that does make it tough, but those are decisions that you have to make that will protect your business. Yeah. And unfortunately, only you can make that decision,
Yeah.
And a lot of times I'm sure people will call up and say, hey, my insurance agent said I can't carry you. And I'm okay with that. Yeah. I don't mind.
You'll be the bad guy.
They'll be the bad guy. Take a little heat for them because I want what's best for their business. Because quite honestly, if their business keeps having escalating expenses through insurance, what's going to happen? They're going to go out of business, and I lose a customer, they're not making money, we're not making money. But if we can help them be efficient and make money and bring their costs down, we can have a customer for life, and that's our goal here. We want efficient businesses that really are efficient, that know how to guard against risk, and it really protects them long term and keeps them with us a long time.